Hi, welcome to the first video of The Greedy Investor. Our aim is to find out investment opportunities in companies with great business model, experienced management, and reasonable valuation. As Peter Lynch famously said, behind every stock there is a business. Find out what it's doing. So, what we are trying to do here is to find out and analyze businesses, because once we buy a stock we are becoming part owners of that business. Okay, see, that's the beauty of investing in equity. We are getting an opportunity to become a part owner of as already established businesses run by great businessmen. Okay, now, only thing we need to do is identify a few good businesses, build a portfolio, and create wealth. Okay, so before moving to the video, here is the mandatory disclaimer. So in this first video, what we are trying to do is a fundamental analysis of Sun TV Network Limited. If you are from South India, you would already be very familiar with this brand. Okay, so while doing fundamental analysis, what we are trying to do first is understand the business, what the company is doing. Okay, about Sun TV Network, it is one of India's largest media groups and definitely South India's biggest one. Okay, it's headquartered in Chennai and established in 1993 by Sri Kala. Alright, that was a basic idea about the company. See, once we do a fundamental analysis, what we need to strongly understand are basically four things. One is about the company, its business. If the business is doing good, if the business is like scalable, if the business has got a future, that's one thing. Second thing is management, the integrity and ability of the management. That's the second thing. That's a very important thing because they are the ones who need to drive the company forward. Okay, and the third thing is industry. Okay, whether the industry is a growing one, whether there is further scope of growth, whether there is intense competition, whether there are any entry barriers, etc. And then finance. Let's move on to the industry. Okay, media and entertainment industry. So coming to media and entertainment industry of India, it's the second fastest growing industry in Asia after China. Okay, and it's supposed to be growing at a rate of CAGR of, that is compounded annual growth rate of 13.5% from 2019 to 2024. Okay, and it's like by 2024 it's estimated to be valued at around 3.1 lakh crores. So there is immense potential for this industry. The one peculiarity of this industry is like it's ever evolving. The improvement in lifestyle and technology, the consumption pattern or the consumption rate of any kind of media will increase. Okay, and considering India is still an underpenetrated market coming to any kind of media, whether it's TV, whether it's internet, whether it's FM. So there is still scope of improvements. So there is still scope for growth. Now let's do a SWOT analysis of the company. Okay, that is strength, weakness, opportunities, and threat analysis. Okay. Coming to the strengths, it has very strong presence in all the four major South Indian languages. Okay, especially in Tamil. So they really understand the pulse of southern audience, and especially they are really strong and number one. It's a clear number one in Tamil Nadu, which is a large market. Those who are from South India, they would already be knowing that Sun is very strong in their movie libraries. Okay, in their collection of movies. So they have taken this advantage to their OTT platform, where they have 4,000 movie titles, which is great. Okay. And coming to their management, they are well experienced, and they have a real grasp of the South Indian languages, and that's why they are still holding the leadership position in South India. Now coming to the weakness, uh, one major disadvantage they have is outside South India they don't have much of a presence, uh, except for the Bangla channel which they have recently started. They don't have much presence outside South India. And coming to their content, it's more rural than urban. Okay, now let's look at some of the opportunities ahead of the company. Okay, uh, we know that there is a growing trend of OTT platforms. I mean, like consumption of content through OTT platform, which is a very good thing considering the fact that they have already started Sun Next, which is an OTT platform. Okay, and the mode, the medium through which entertainment is consumed has been showing a considerable shift from traditional media to mobile and internet. And if they are able to update their content based on this viewing audience, there is a like lot of opportunity. There is lot of opportunities for them to penetrate this audience. Okay. And we can say that nowadays it's a norm to subscribe our channels. Later it was not the case. Now it's after the trial rule, it's like you need to subscribe a channel. So this thing, this subscription is bringing in extra revenue for the other than an advertisement revenue. It's bringing in more revenue. And one more thing we will see in later stage, that they have very strong financials. Sun TV have very strong financials, and with that strong financials, they would be financially able to move from south to any other audiences. Now let's look at some of the threats which the company may face in the future. One thing is intense competition. I mean, the media and entertainment, that sector is crowded. New content is being created every hour and being uploaded in platforms like Amazon, then Netflix, even YouTube. Okay, so that is a fact, and they need to address it. Okay, so one more threat it may face in the future is, like, once Netflix and Amazon with their huge backup are entering the market. If they enter the regional market, it would be like, they will come up with content like anything. We have already seen in Hindi, in languages like Hindi, they have already entered strongly. And if they enter the market here, I mean, like regional markets like Tamil or Telugu, etc., it would be like they will be spending like anything, and as a result the overall production costs may tend to increase. So that is one of the threat it may face in the future. Coming to OTT platforms, there is always a concern that the generation next will prefer Netflix type content. Like, they don't have any limitation on the type of content they create. I mean, it can be as imaginative as possible. So that's a threat. One major crisis, not only Sun but also any other kind of business is facing, is the current COVID crisis. If the situation worsens, the first major impact will be on the advertisement spends, and it will directly have an impact on media and entertainment industry. So they need to survive this. And coming to Sun, the problem is, as we discussed earlier, they have a strong regional flavor, strong regional focus. So that may have a limit on scalability. They have to address this problem and overcome it. Let's move on to the financials and valuation. Okay, so if we see the sales and net profit, That's really good. I mean, like the annual report for the year 2019-20 was not available, so we have prepared it based on 2018-19 annual report, and the figures are showing excellent growth. Uh, with a sales value of 3,783 crores and a net profit of 1,433 crores. Okay, area of concern is the 2019-20 figures. As I already said, the annual report is not out yet. So once we compile the data from different sources, it's showing negative growth, but only I mean, like we will only be getting the confirmed report on once they come up with the annual report. Okay, so let's not go into that. Coming back to 2019 till 2019 18-19, they have reported excellent figures. Okay, sales and net profit. And if we see that one of their strong area is cash from operating activity. If you look at it, it's standing at around 1824 crores, which is coming from almost all of it is coming from profit from operations, which is really great. And in the finance, if we look at the positives, as we have already seen, it's showing a decent growth till 2018-19, and the 2019-20 figures need to be confirmed. Okay, and if we look at other aspects, that is return on capital employed, it's excellent at 41.61 percentage for the financial year 18-19. Okay, and it's way ahead, way higher than most of its competitors, and its return on equity is standing at 27 percentage, which is also really good. And it has got an excellent interest coverage ratio of 200, and it's paying out, I mean, like dividend yield of 6.6 percentage. That's also really great. And if we look at the debt equity ratio, it's almost coming to zero, and it's virtually debt free. One very important thing or interesting thing is that promoter is holding 75% of the shares. Still they are holding 75% of the shares, which is a very good thing, considering the fact that it's assumed that more the promoter holding, the more commitment they have towards the business. Now coming to their valuation, it's the PE is at around 10-11, which is a really good and reasonable valuation. And they have, as I mentioned earlier, they have a positive net cash flow, and cash flow from operations are really good and improving. And they have a credit rating of A1 plus from ICRA. Now let's see some of the negatives. The first point I have already mentioned earlier, like 2019-20, the sales and net profit is showing a negative growth, but we could be able to confirm it only once we get the annual report, which is not published yet. And one thing which we noted is like considering the share price. Okay, considering the financial position, the share price doesn't grow that much. Okay, the company was listed in stock exchange during the year 2006. It was listed at a price of around 250. Sorry, 250. And if we see, it's not showing a steady growth. I mean, in any of the stages, it's not showing a steady growth. And if we see, there is a clear resistance at around 500. Historically, if we see the data, there is a clear resistance at 500. Only during 2017, during that great bull run of 2017-18, it made a huge like rally, and it created its peak, which is at 1098 or something. And from there, during the corona crisis, it fell down like anything, and it fell down to close to 250. And even though most of the companies recovered from it within some 3 to 4 months, it's still to come out of that drop. Overall, the company has a lot of things going on its favor, especially in the financial side. Two major challenges the company must overcome are the current corona crisis, which they will be able to, we think, considering the strong financials. The second challenge is adapting the content to the next generation, Gen Next, okay, who are exposed to Amazon and Netflix content, okay. So once if a company is able to overcome these two challenges, we see a bright future for Sun TV network. So that was our view about Sun TV network. Hope you find it useful. We are actually on a continuous quest to find good investment opportunities, and we will come up with the analysis of any other company in the next video. So till then, stay healthy, stay invested. Thank you.